Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Today's going to be kind of a challenge. Try and get a lot of stuff in just 15 minutes, but we're going to do it. I got confidence. I got confidence in us. Welcome, everyone, to the Wednesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates right here in Wilmington in 15 minutes or less. And like I said, today might be a little bit of a challenge, but challenge accepted. So we got retail data, we got some inflation data, and we got existing home sales. And so let's start with what's going to move rates. So rates, for the most part, we had the 10-year was down about a little bit over 2, almost 3 basis points. So a little positive movement there. And then the last time I checked, and I probably should have been ready for this, no movement in the Mortgage News Daily 30-year fixed index. So for the most part, rates improved slightly. Because like I said, Mortgage News Daily is always a little bit of a lag. 10 years always kind of a better indicator of what's happening that day with rates. And then, of course, also on top of all of that, we have some movement in the spread between the 10 and 30-year that's also sort of impacting rates. And so for the most part, we had a good day for rates. And it was kind of surprising because if you're just looking at the data, retail sales came in hotter than they were expecting. And normally when that happens, rates might jump because it shows that, the consumer is confident, consumer is spending money. And so, yeah, it's December, but the consumer is spending money. And so it's usually a sign of strength in the economy, and rates don't usually get cut when the economy is strong. So why did that happen? Well, retail sales jumped 0.6 in November. So once again, sorry, this is November. We're still dealing with somewhat delayed data because of the government shutdown. So retail sales jumped 0.6% in November, rebounding sharply from the 0.1% decline that we saw in October. And that was the strongest monthly gain since July. This according to, of course, the Census Bureau. Leading the way were sporting goods, for whatever reason. They were up almost 2% from October. Gas stations, probably because a little bit of a jump in gas prices, jumped 1.4%. And building materials, garden supplies, things of that nature were up 1.3%. So, like I said, kind of a decent month for retail sales. Not all categories were in the positive. For some reason, department stores did not have a good November, down almost 3%, while furniture stores, I don't know, because you're not buying clothes for probably not buying furniture. So they slipped 0.1%. So those are kind of the outliers, or not really the outliers, but kind of the big categories that potentially moved rates for the month. Retail sales were up 3.3% year over year, matching the pace that we saw in October. But that is the slowest level since last October. So 3.3%, still decent year-over-year growth, but still signs of slowing on a year-over-year basis. So even though it was a really good month, still that year-over-year slowing that we are seeing. And then consumer prices, so if you look at the CPI from November, consumer prices were up 2.7%. Retail sales data does not adjust for inflation. So when you look at the actual number, 0.5% is the spread there, 3.3, 2.7. So retail sales were actually up about 0.5%. So really, retail sales are up a little bit. So we had a good month, November. But when you look kind of actually break it down, it's not as exciting. So year over year is lowest level in about a year, matching, the month before, but that was the lowest level since the year before. So slowing year over year data. And then when you compare it to what's happening with inflation, not really that much growth. So that's why, you look at the top line number, oh man, 0.6% jump, up 3.3%. Those sound pretty, robust and strong. But when you actually look at where we have been and compare it year over year, compare it to inflation, numbers aren't as impressive. So I got to dive into the numbers and look at them. Bond market, I'll tell you. Now, this report came out at the same time as producer price data. Of course, producer price data we always get usually after CPI. Every once in a while it comes out before, but this month was keeping in trend. Producer prices were up 0.1%. We got two reports, one in October, one in November. Prices were up 0.1% in October, 0.2% in November. And since we got two reports, I'm kind of looking at them as two. Those are the two best back-to-back readings since March and April. So we'd actually had better monthly readings, but then you'd have like a big jump the month either before or after. So really the two best months back-to-back, November and December, or October and November, best since March and April. And that was actually when prices were falling. And so I think it was 0.1, 0.2. So you average that out, that's 1.5 or 0.15. And so not bad. Year over year basis, producer prices were up 3% in November, slightly higher than October and the second highest reading in the past 8 months. So once again, some caution flags like we saw from CPI, which is like not awful, but that's kind of still a high level. PPI, you also want to be around 2%, and to have it be at 3 means it's 50% higher than it should be. And important to remember that producer prices are not influenced by tariffs. They don't count import prices. So that's something that's probably a little troubling to some economists because, a lot of the arguments that we've been hearing about CPI and other inflation data is the impact of tariffs. Now, of course, tariffs, long run, are deflationary, but in the short term are inflationary because prices rise. And then as those prices rise, people buy less of them. And then as consumer demand drops, prices fall back down. So like in the long run, deflationary, short term, inflationary, and clearly many economists believe we're still in sort of that inflationary period. But the fact that PPI is not impacted or they don't count tariff data or import prices, which would be impacted by tariffs, that's another thing. It's like, caution, just a reminder. But here's what interesting is that we have retail sales rising along kind of steady price growth. So not like alarming. Once again, 0.15% over those 2 months when you average them out is, you annualize that, that's under 2%. It's right around 2%, a little bit under. That's not bad. No, is it a little bit over? That's why you don't do math live. It never goes well. I don't care how smart you are. Never do math in your head while you're recording yourself. It will go bad. But the point is, that's not bad. And then to have a jump in retail sales. I mean, that's kind of what you want. I mean, that's like the Goldilocks option where you're seeing strong consumer spending, consumer confidence, but you're not seeing prices rise with it. So that could be one of the reasons why you are seeing sort of an improved rate environment and that 10 and 30 year spread kind of coming, retracting a little bit. And so all in all, pretty good. That's what I'm saying. I mean, there's some things to be concerned about, as always, but not straight up flashing red lights. So it's like, okay, not bad. So all in all, pretty good. That's where we are with retail sales and producer prices. But I'll tell you something, that was not the big report of the day. The big report of the day was existing home sales because, oh my gosh. So talk about beating economists' expectations. So I think economists were expecting like a slight rise to 4.2 million or something along those lines. Big jump. 5.1% jump. Existing home sales jumped 5.1% to a seasonally adjusted annual rate of 4.35 million in the month of December to close out 2025. That was the strongest pace since March 23. So almost 3 years. Not quite. Almost 3 years. That's some positive news. And it was a mostly positive month. I mean, it's kind of shocking that we had such a good month and not every region was up. Guess who was leading the way? Who do you think? The South, baby. They jumped 6.9%. Nice. To an annual rate. I'm always going to make that joke. To an annual rate of 2.2 million, accounting for, get this, 50.6% of all existing home sales are happening in the South. And what was yesterday? New home sales? What was the South? 70%. Wow. South is kicking butt and taking names. The West also had a good month. They were up 6.6%. Northeast posted a modest 2% gain. And the Midwest, the lone region that was in the red, slipping 2%. But they are the second best for home sales at 1 million. Not surprisingly, with the bigger jump in existing home sales and people tending not to usually list homes in December at a pretty big rate, housing supply tightened. Total existing home inventory fell 18.1% to 1.18 million units. It's a lot of 1 and 8s now that I'm looking at it. I mean, actually, you know what's funny? They're actually inverted. 18.1% and 1.18 million units. Oh, no, they're not entirely inverted. Sorry, never mind. That would have been 81%. See, I told you, don't do math on the fly. Don't even look at numbers. It's bad. So the 1.18 million units, lowest level since January of last year, which kind of makes sense that you kind of see this slowdown, and not only, which is kind of funny because existing home sales jumped, but usually people are like, I'm not going to list my home in December, focusing more on their family. Even though I have heard there is a lot of evidence that listing your home in December has a value because people love Christmas decorations. And a lot of times people buy a house. They're like, oh, where am I going to put the tree? And how's the house going to be decorated for Christmas? Because people love that. And seeing it sometimes can create a value. But normally listings fall, hence smaller supply. Not surprisingly, with total volume down and existing home sale volume increasing, the month supply of unsold homes dropped sharply to 3.3 months in December, down from 4.2 months in November, in the lowest reading since last December. Yeah. Median existing home price came in at $405,400, up just 0.4% from 1 year earlier. That's kind of a big drop from the 1.4% gain that we saw in November, and was the weakest price growth since May. But December still extended the streak of year-over-year price increases, 30 consecutive months. Ever since we saw those drops in, what would that be, 23? And then we went positive, have not looked back. Lawrence Yun said the market is showing early signs of improvement after another challenging year, saying, quote, 2025 was another tough year for home buyers, marked by record home prices and historical low home sales. However, in the fourth quarter, conditions began improving, lower mortgage rates, slower home price growth. Which is, I mean, it's true, right? I mean, when you have mortgage rates falling, which they did in December, I think the stat I've seen is we're down about 1 full percentage point mortgage rate wise. So we're now down like in the low 6s, where we were in the 7s a year ago. So lower rates. And then home prices. I mean, once again, home price growth, median home price up only just 0.4%. Which I thought was going to be the lowest level since like 23, but May, we did see a little bit of jump and then kind of come back up a little bit. So yeah, that's a great environment for buyers. That's why, it's so funny because in the industry, we're like, it's a good time to buy in December. And everyone's like, oh, don't listen to them. They're just, just pitching their own book. I'm like, no, I mean, this is a good environment. Clearly, December proved it. Highest level in 3 years, or almost 3 years. We got, like I said, fallen rates, and home prices are kind of leveling off. So that is a good environment for buyers. I'm just saying. Just the data. I'm not pitching my book here. I mean, kind of. Not entirely. Pitching my own book. All right. We did it. Barely. So you guys enjoy your Wednesday. We'll be back here Thursday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.